There we go. My bad, guys. That's embarrassing. All right. Welcome to Carnivore, home of the badass traders. We normally focus on stock trading, swing trading for serious traders, both long-term and short-term investors. Today, we are taking a break from our usual stock market content to talk cryptocurrency with you all. We are joined by one of the founders of Carnivore Trading, the legendary Trader Z. He is ready to give a crypto for beginners session in the first half of this. We are going to discuss some altcoins and meme coins after that and open it up to Q&A for everybody who is here. So without further ado, let me pull Trader Z on. And Trader Z, welcome to the stream.
Thank you, Connor, for that introduction. Thank you, everybody, for being here. We're just going to dive right into it as we normally do. We've got a lot we want to talk about and a limited amount of time. So let me get my slide deck up here just so you guys can see, and we'll just get right at it.
There we go.
All right. Welcome to our little trial run of a crypto discussion at Carnivore Trading. It's Wednesday, March 13th, 2024. What a great time to be talking about crypto. Let me quickly go through our disclaimer, guys. Remember, we're not a registered investment advisor. Past performance is no guarantee of future results. All Carnivore Trading portfolios, including crypto-related, are hypothetical, and nothing on this call should be construed as individual investment advice. Always remember to do your own damn research. I showed this meme on our weekly call to our carnivore family this week. And if anybody's a fan of Narcos, I think this is how some people who've missed the Bitcoin train may feel, as if the train's already left the station and it's too late for them to get on. And what we're here to do is maybe tell you that you're wrong and that it isn't too late. So as Connor said, we don't really focus on crypto particularly at Carnivore, but we do focus on all markets. And this has become a much more popular discussion point within the Carnivore Trading family. I bring this tweet up from, let's see, I think a little bit at the beginning of 2023 maybe. And we thought we had put a bottom in Ethereum and in the alts. We had tweeted this out as Ethereum was trying to kind of come, around off the bottom. So we were pretty early there. We also called a bottom here recently in Bitcoin around 26K back in June. You can see that at the time that wasn't necessarily a really popular opinion. I said there, I said it. But that ultimately ended up being a pretty good time to enter on the long side. And subsequent to that entry point, you would have seen this staggering move we've had up to 73,000, where Bitcoin has now surpassed silver as an asset class and is only smaller than a handful of tech companies and gold. So this transformation of Bitcoin into a recognized and bona fide sort of asset class or asset within crypto as an asset class, it's happening. And quite frankly, depending on how far you think it goes, there could be a lot of upside left. And I use this gold as the analogy. You can see the gold market still about 10 times the size of Bitcoin. So if Bitcoin were to achieve just 20, 30, 40% ultimately of the size of gold, then there's still quite a bit of upside left. We know you probably are familiar with the term HODL. For those that you don't know what that means, it's kind of a crypto slang for hang on for dear life, hold on for dear life, because the ride is often quite volatile. Okay, so you've got clearly what I would call the best performing asset class or best performing, commodity, if you want to call Bitcoin a commodity, which it is, by far over the last 12 years. The cumulative returns aren't close. The annualized returns aren't close. This is why you need to be in this asset class. You just have to be cognizant that it's incredibly volatile, and every 3 or 4 years you get a massive drawdown. You can see in 2014 that was 58%. In 2018 it was 73%. In 2022 it was 65%. So we tell the carnivores that they should probably own and hold Bitcoin and not trade it unless they're just really good at coming in and out of the market. You can see subsequent to that 25K bottom call that we made, it's been a pretty torrid run up. We've been advising the carnivores to buy along the way. Our next target is around 100K. Don't necessarily think that's the top, but just think that's the next round number that makes sense for the market to target as it sort of seeks price discovery above 70K for the first time. So the driving force behind this big move has clearly been the approval of the spot Bitcoin ETFs. There's 11 of them. They've accumulated $55 billion, actually more than that. This was a couple days old. It's only 1.6 billion behind the total AUM of the largest gold ETF. So the pace of the accumulation of assets has been just incredible. It took gold 27 months to cross $10 billion in assets. It took Bitcoin, just one trust, to cross 10 billion in 7 weeks. So there's a huge amount of capital flowing from traditional asset managers, advisors, retail investors, family offices that have feared the custodial risk of buying and holding Bitcoin themselves. So now that they have a vehicle to do so in a regulated security that they can buy and hold and sell in a traditional securities account, it truly is a door-opening avenue for many, many people who will just never be willing to go through the technological training and sort of philosophical leanings that are required for someone to want to engage in self-custody, which, quite frankly, if you're in crypto and you accumulate it in size, that is the direction I would advise you go long-term, but that's a discussion for another day. I think in general, crypto is kind of having its goodwill hunting moment against the establishment right now, as it is approved and sort of used by the world's largest asset managers like BlackRock and Fidelity to gather new assets. It's kind of an ironic twist of fate, given that many of these organizations were very, very critical of Bitcoin as it was sort of being rolled out and adopted mostly by retail investors, particularly early on. So I think what most people want to know is, are we late? And I think the answer is really no. This was something I saw on a forum on Reddit, and it just kind of is anecdotal evidence that people really just aren't aware of Bitcoin as an investment asset class in aggregate, the way they are about stocks and bonds and real estate. And I think everybody knows that, and I think everybody knows and accepts that that's changing, and that crypto and Bitcoin is growing as an asset class, particularly the sort of awareness of it. I just don't think people understand how big that gap of understanding is and how few people are actually in this market yet. And really, from a basic perspective, before we kind of dive into some of the alts, what you have to realize is that Bitcoin is the apex asset in crypto. Okay, everything else is secondary. Everything else, including Ethereum, is more speculative. And truthfully, only Bitcoin and its proof of work sort of mechanism that requires the mining of Bitcoin to be backed by electricity has sort of reached this institutionalization moment. No other crypto has. Ethereum may via ETF coming up, but remember, if you are just getting started in this space, that Bitcoin's where you go first, and it's where most of your assets should flow. Okay. And if you're just getting started, the way to do it is to dollar cost average, which simply means to buy a little bit over time. So get in the habit of buying, whatever amount you want to invest periodically. That'll keep you from getting a bad entry point. But via this proof of work algorithm that the Bitcoin blockchain reaches consensus, this is what backs Bitcoin and sort of makes it a tangible real world thing in ways that proof of stake cryptos are not. So proof of stake is what Ethereum has shifted over. Proof of stake is what a lot of altcoins use as a consensus mechanism for processing transactions on the blockchains and creating new blocks. So the big difference between these two mechanisms is that, proof of work and the Bitcoin algorithm and the mining process itself keeps new coins from ever being created. Whereas a lot of proof of stake blockchains are constantly creating, new coins as they pass those new coins out as staking rewards to people who stake their coins on the chain. Now, these are getting technical. Don't get bogged down into some of these concepts. The major difference between proof of work and proof of stake is that proof of work requires, a lot of processing power, and you need to control 51% of the network, which is basically impossible for someone to do to the Bitcoin network. And there's a competitive effort to solve an algorithm, a cryptographic problem, to get the rewards. Okay. Whereas on proof of stake, essentially, validators stake their coins on the chain and they are randomly chosen to participate. You still have a 51% attack mechanism for Ethereum, but the way that is spread out is a little different. And so it's here again difficult for someone to accumulate that 51%. In addition, obviously, to the capital that would be required at this point. If someone were going to attack a chain, they would do a less secure chain at this point, would be my guess. The validators, they earn, transaction feeds, and there is no reward for block validation. So, the differences here are technical, but they're significant because only proof of work requires vast amount of electricity and computing power, and that's what distinguishes Bitcoin as a commodity, not as a security. It's also what makes it sort of backed by the real world of electricity and ultimately physics in a way that proof of stake coins aren't. Okay, so that's a philosophical debate. We're not going to get too deep into that, but I know somebody had a question.
Yeah, Z, is the trend then going, Bitcoin is proof of work, and then are you saying that the trend was going towards proof of stake for a while, but they found problems? So
no, it's really not. It's not a problem, Connor, so much as proof of stake is a lot more efficient. It's a lot less energy involved. It is sort of a great mechanism to reward people to be a part of the blockchain. So it doesn't require any significant hardware or electricity like it does to, mine Bitcoin. The proof of stake consensus is less secure, Connor. So I think it makes sense for new chains and chains that aren't looking to achieve the same sort of security level that Bitcoin has, or sort of serve as that anchor, if you will, to the entire crypto universe as Bitcoin does, to use proof of stake versus proof of work. And of course, that's why Ethereum went to proof of stake, was to lower that energy consumption profile, to make the blockchain more efficient from a energy perspective versus the proof of work energy sort of hog that Bitcoin is. Now, you can philosophically argue that Bitcoin goes after cheap energy in the system. We're not going to debate the
Right.
the pros and cons or the rights and wrongs of the energy consumption of Bitcoin. I think that's for someone else to do. We just look at proof of stake being probably the way forward, Connor, versus a proof of work concept, which you just maybe don't need to have that level of security because you've already got it with Bitcoin that serves as that apex asset and that anchor to the whole system.
Right. And then when you say stake, is that kind of think of that like getting dividends or getting some kind of return on?
It is. And you got what typically is involved is locking up your coins for a specific period. So you stake your coins, which means you can't sell them. Okay. And for staking them, essentially they will reward you with not dividends, but future emissions of the protocol.
Nice.
So obviously the staking rewards are subject to change. That's if I can shift here. Let me finish up this little section.
Yeah.
We'll go to staking rewards real quick because I only got a couple more slides. Guys, the other part of this, sort of catalyst for Bitcoin right now is the halving, where in essence the reward for mining Bitcoin transactions gets cut in half. This has happened a few times already. The first reward was 50 Bitcoin. That dropped to 25 in 2012, to 12.5 in 2016, to 6.25 in 2020, and now to go to 3.125 sometime around April is the anticipated time. So 19.65 of the 21 million have already been mined. That leaves just 1.35 million to be mined. And some estimate as many as 4 million have been lost. So there could be as few as 15 million in circulation. So what we have is a low float situation that is being overrun by ETF net inflows. They're having to buy 5,000 to 10,000 Bitcoin a day. Right now, total coins being mined is 900. That's going to get cut in half. So the supply-demand sort of imbalance is going to actually increase with the halving. So as much as you think maybe there's already been this parabolic move that you've missed, in fact, maybe there isn't. Now, Connor, I'm going to share a different screen to get back to this concept of proof of stake.
Yes, please.
There's a great website called Staking Rewards. You can go and understand and sort of see the major players and, quite frankly, the not so major players. We've got 360 billion roughly in the staking part of crypto. That's a roughly 6% type staking reward. Your leading chains are Ethereum, Solana, Cardano, BNB, AVAX. Those would be the higher market cap tiers that you could look to sort of give you an introduction to the larger cap staking blockchains, Connor. Ethereum being by far the most recognized. The reward rate right now for staking your Ethereum is around 4%. That may be a little high. If you went through a third-party service like Lido, it'd probably be closer to 3. But Solana 7, ADA is 3, AVAX is 8. So you can see,
Are you showing a screen, Z?
Yeah. Oh, could you not see any of that?
No, sorry.
Try that again. Sorry, guys.
There we go.
There we go. StakingRewards.com. Here's your total understanding and navigating the 360 billion. So you've got your top staking blockchains here: Ethereum, Solana, Cardano. This would be where you would want to start. Probably Ethereum would definitely be the first place you would start if you were going to go down this path. We're definitely recommending people look at Ethereum in an attempt to front run an ETF that's coming. I actually think there might be ETFs for several of these blockchains before it's all said and done. So this is a great website, Connor, devoted to, learning about and seeing what some of the rewards are related to, blockchains in the staking universe. And clearly, Ethereum and Solana are, your two top dogs. Ethereum now being close to $500 billion and Solana being over 71 billion. You can see staked Ether actually is number 6 in the crypto market cap. So Lido is a service that allows people a real easy way to stake their Ethereum versus doing it yourself. So if anybody's interested, you can go to lido.com and check that out. But these are the major staking chains, Connor, and the rewards vary from 3 to 7%, and they go much higher on some of the more speculative chains. The other thing that's interesting about Ethereum now is that currently it's in a deflationary mode. So whereas Bitcoin is capped, the way Ethereum is now structured, there's a burn mechanism that actually burns Ethereum via the transaction fees that are generated on chain. And right now, supply growth is running about negative 1.25%. That's pretty good considering that there is actual new issuance occurring. So right now, ETH is actually deflationary, which is interesting and could continue to be for quite some time. So, the staking mechanism within Ethereum has drawn a lot of capital into that staking pool and has locked up a lot of Ethereum, to receive the rewards that are being generated. If you ever wonder if any of these blockchains actually generate fees, they do, and you can track this stuff. There's a great website called cryptofees.info where you can see kind of the daily and 7-day average fees that are being generated by the chain. This isn't necessarily completely accurate or have all chain information on it, but it's a pretty good start. You can see Ethereum ranks number 1, followed by Uniswap, which is, of course, the most popular decentralized DEX app to exchange Ethereum-based tokens and other tokens. So Uniswap is probably the most attractive from a price-sales ratio. So if you haven't looked at the fees it was generating and asked yourself what you were paying for those fees, in an attempt to measure this in some sort of traditional financial measurement, you can see Ethereum's trading at about 45 times.
Mm-hmm. So this is saying that there's 28 million almost a day in fees generated from Ethereum.
Yep, today that is correct. That's what it's saying.
Wild.
And the average daily run is close to 30. So, Connor, that's when people, they may not really fully understand that, these things are actually generating, real world revenue now. And there are many others that do so as well in much smaller amounts. But, this sector is real. And, the fees that are being generated are real as well. Avi's a great DeFi platform you can use to borrow and sort of supply cryptos and earn interest for doing so. So they're generating a lot of origination fees on loans and liquidation fees. So there's real world fee generation occurring on some of these chains, and it's literally millions of dollars a day.
So for the total newbie, they should know that there's this thing called crypto. The number 1 coin is Bitcoin. Ethereum is by far number 2, but anything that's not Bitcoin is generally called altcoins, and not just Bitcoin or Ethereum. Right. What?
That's great. And I look, so you should be able to see this now on my screen.
Yep.
We've got this whole thing crypto that's a $2.8 trillion market. Okay. Bitcoin is 1.4 trillion of that. Okay. So Bitcoin's dominance is about 50% of crypto. Okay. ETH is another 16%. So basically between Bitcoin and ETH, Connor, that's 66% of crypto.
Yeah. You got 2/3 right there.
That's it. 2/3 of it right there. So if you're a newbie and you want to know where you get started, that's it right there. Go buy yourself some Bitcoin. If you don't want to open a Coinbase or a Robinhood account, then go, do it via the ETF and your brokerage account. The Ethereum, you're going to have to go out and actually open up a Coinbase or a Robinhood account, buy it. If you can get your hands on it and then stake it, that'd be great. You're going to get those rewards 3 to 4% annually. Okay. That's your first step for a newbie. Okay. And that's, to be done in a manner where you probably don't put all the capital to work at once. So you buy some and then every month you buy a little more. And that's how you get started, guys. And then from there, when you want to get crazy and have some fun with this stuff, you start buying the altcoins and you look at the Solanas and the Cardanos, or maybe you look at the level 2 Ethereum scaling solutions like Avalanche, or, you even go away and go to a different sort of, blockchain that's more interoperable. And Cosmos is a great example of that. You've got Ethereum, links like Link that bring real world data and link it up to Ethereum smart contracts that are interesting. And then, Connor, of course, you've got, silly things like the meme coins that are now $18 and $24 billion things with Dogecoin and Shiba, So for the newbie, what they need to know, Connor, is that, hey, look, this thing called crypto is really mostly Bitcoin and Ethereum. When I go down from there, I get really into this sort of Ethereum competition and stable coins, which, of course, everyone should know what a stable coin is. That's just a coin that's meant to represent a dollar on the blockchain. Okay, the largest being Tether. That's a $100 billion thing. We've got USDC. That's a $30 billion thing. Okay, can't underestimate the importance of Tether, guys. I mean, some ridiculous percentage of all cryptocurrency transactions have Tether involved, 80, 90%. So, but once you get down into these other altcoins, Connor, the market caps, they drop dramatically. Yeah. And everything becomes a lot more speculative. And some of it becomes outright like silliness, right?
Right.
Where, something like Pepe, which is a meme coin that is probably, third or fourth behind the dog face meme coins. Look, Pepe is a $3.7 billion thing. This is greater fool theory stuff, guys. If you're trading in this world, this is pure speculation, nothing more. There's no fundamentals behind any of this. Okay. By the way, that looks like it's going higher. Floki would be another one that, like, if you guys are really degenerates, like, this is a $2.6 billion thing now. Same pattern. Look at this consolidation pattern. So, you could argue that Shiba Inu has done some things to make it a real world coin. They've got a Shibarium, which is a sort of level 2 blockchain that, smart contracts and does things. So you could maybe argue that this is trying to become something beyond a meme that has real world utility. Still be determined. All that stuff is just highly speculative, guys. It's just, you do that with the amount of money that you're comfortable losing. If you want to get started, you go at Bitcoin and Ethereum. You get some Ethereum staked, and then you start picking some level 2s like Solana and AVAX, and then maybe some Ethereum Link type stuff like Chainlink, or a couple of scaling solutions to Ethereum, Polygon. Tron's interesting over in Asia. It's used predominantly for stablecoin transactions. One of the more, quite frankly, one of the more popular blockchains in the world. Look, you've got probably more wallets than you do for Bitcoin, and you have more daily transactions in stable coins than you do on Ethereum. So, 217 million accounts, 7.2 billion transactions. Tron is the world's fastest growing public blockchain. I don't care for the founder, but it's morphed into quite an ecosystem. And, this has been a great performing, blockchain. It's gone from 6 to 12. So there's just, when you get out of Bitcoin and Ethereum, Connor, you really step into the world of much smaller, much more speculative, much riskier, and quite frankly, more prone to less utility.
Yeah.
So for this call, I would tell people to focus, on the big dog stuff and get their appetite wet. When you go beyond that, pick a few other alts to tiptoe into and get long. And then, Connor, where I really see, the opportunities are in getting into some of these lower tier categories within alts that are going to be the next big thing. Okay. That gets into stuff like DeFi, and that gets into artificial intelligence. Okay. Which is coming to blockchain big time and is going to be huge. And it's just in its infancy. Okay. We got play to earn, GameFi, and gaming blockchains going to be huge. And so those three right there within alts, DeFi, AI, and gaming and GameFi, that's where the real risk is. But that's where the real 20, 30, 40 bagger type potential resides as well. Because at this point, Bitcoin could maybe 10x, right? In theory, right? But it's not going to 100x from here. But
can you pull up that? You showed a slide on the paid call recently with the gold and Bitcoin market cap theory. 40%, 60%. Because that was very eye-opening to me.
I wish I had a different slide that was better. The one I've got is good enough. Gold's 14.67 trillion. Okay. And this is all back of the envelope math. 1.4 trillion. So roughly 10 times the size at current prices. Okay. So if memory serves me correct, I think we had an estimate of around 500,000 of Bitcoin if it were to achieve 40% of gold's market. And that's back of the envelope, right? But I think Bitcoin becoming gold is a reasonable assumption. It might not be perfect. It might only end up being half as big as gold. It might end up being twice as big as gold. Either way, if it becomes half the size of gold, Bitcoin can go up a couple of multiples from here, which I think it probably will most likely do. Ethereum probably, Connor, has maybe a little more upside, and then when you go down the spectrum from there, it gets a lot bigger.
Here, you see that?
There it is.
Yeah.
So here we are at about between 60 and 70. You're at about 10%. Exactly what we're showing you. And so if we were to get to 40%, that puts you at over 500,000. 60%, 785, and then 100% of gold, that puts you over 1 million. So I think those are all reasonable numbers. And I think this is a reasonable framework to work underneath. I think this means that a lot of these alts that we're talking about will be many multiples of this in terms of return. So while the probability increases that you buy a bad project, or that you get a rug pull, or you get a chain that ultimately doesn't sort of become anything, the chance you get a 10 bagger is 20 bagger is much greater the lower the market cap. So Connor, when I'm looking at these things, it's kind of like, hey, if you can find them when they're less than $500 million on their way to becoming a $5-10 billion thing, that's where you can get those 20-30 baggers. And I think you'll find those in DeFi. I think you'll find them in AI, and I think you'll find them, quite frankly, in some GameFi stuff coming up too.
I'm excited to dive into that on the DeFi, AI, and game. But then and we're going to do some tactical stuff for investing too. I just want to rewind and bring up. So I'm trying to get my grandparents to benefit off of cryptocurrency. I'm not too worried about them timing things here and there. I just want them to pick a percentage, 5%, 10% of their income, and sock it away each month. What's the easiest path for someone like that, like my grandparents, to get involved?
It is by far a Coinbase account. You set it up on a smartphone, or you go to their house and say, Gramps, sit down with me for 15 minutes. Give me your driver's license. I'll have you an account set up. I'll have you linked to your bank account. We'll transfer some funds over, and then we'll set up an automatic buy that happens once a week or once a month automatically. And they can start putting away $500,000, away in Bitcoin for the grandkids. And you just set it and forget it, man. And it really is that simple. Is that the most, secure way to own your Bitcoin? Of course not. It's on a ledger yourself, right? But that's not what we're talking about. We're talking about ramping grandma and grandpa into crypto. And if you're going to do that, the best way is with a platform like a Coinbase. By the way, they didn't sponsor this, but they should have. And or a Robinhood. And there are others out there, but they're the biggest and they're publicly traded, so it's easy to point people in that direction.
Okay, then so how about not buying crypto directly? What are the other avenues to get in on that ride? So crypto-related stocks, crypto-related ETFs.
So the easiest path there, buddy, is the spot Bitcoin ETFs. IBIT has the most, I think, under management. That's BlackRock. You've got Fidelity, FBTC. You've got ARK, ARKB, Bitwise, BITB. You've got Franklin, EasyBC. Invesco is BTCO. I just go with the more active volume ones, which I think is probably the BlackRock and I think Fidelity. The flows are ranging, it was 800 million yesterday, 600 the day before, 150 on the 21st. So these are weekly. Sorry. The ETFs are the easiest way, Connor, for someone who's got a brokerage account to just go in their brokerage account and click, I want to buy some IBIT and be done with it. Right. Easy peasy. Nothing to it. Nothing to think about. No accounts need to be set up. That's your thing to do for someone who doesn't want to go through the trouble of setting up a Coinbase account.
Right on.
Don't let that be something that deters you, though, guys. It's just really easy. It really is. If you're comfortable with social media on your phone and apps, you can click your way through opening a Coinbase account. Don't be intimidated by it.
And then let's say you are trying to game your process a bit and not just set it, forget it. Are you buying every dip? Are you scaling in as it goes up? Is there a strategy you recommend for intermediate guys in crypto?
Yeah. So for guys that want to get fancy with their entries, I think every time it dips 10, 15%, you just buy.
Mm.
And knowing that it might dip 25, 35, 45%, right? What I have seen and learned through great misery and pain is that you're better off just buying and holding this asset class and not trying to get too cute around trading it. If you want to time an entry, buy it when it goes down. So when you see it come in and you get these flash crashes and it drops 10,000 points in a nanosecond, I mean, be ready with some cash to buy some. I think most people, Connor, are probably better off just trying to regularly buy it. If you want to get cute with your entries, buy the dips.
Well said. And you had a great answer to this question I'm seeing in the chat the other day. But what's the downside of an ETF like IBIT versus directly owning Bitcoin?
So obviously, there's the saying in crypto, not your keys, not your coin. In theory, you don't actually own that Bitcoin. You own a tracking vehicle that's constructed via security that in theory owns that Bitcoin. You can't move that Bitcoin, which is really one of the primary advantages of Bitcoin. So once you get to at least a size or scale of holdings where you want to keep some in self-custody, it's the portability factor, Connor. I mean, there's very, very few forms of wealth that are that there's no form of wealth that's this portable. Nothing. Art, nothing. Jewels, none of that. It's probably the most concentrated form of wealth in the world, right? You can put it on a thumb drive with a security, seed phrase. So portability would be the answer. And then self-custody, Connor, it's the same concept with like gold and, owning paper gold. If you don't actually physically own the gold in your hand, in your custody, then you just own a proxy for it. So that's okay for 90% of most people. If you're a pro and you want to self-custody and embrace the full libertarian ethos that is Bitcoin, then, do it. Just know that at that point, it's like cash or gold. And if it's stolen or lost, it's gone. So most people should just open a Coinbase account, Connor.
Right. Yeah. So then before we start going into some more advanced stuff, I want to bring up how, my experience with crypto was getting involved in 2016 or 17 when it was originally really hot. I remember the mania around Bitcoin beating 20,000 at the time. And that just seemed like the sky was opening up for everything. I got burned. I lost the money there. And I just gave up on crypto for years. And I figured I would just not worry about it, see where it went. And over the years, though, it just keeps getting bigger. It doesn't leave the news. I've started seeing Bitcoin machines popping up, even when I was living in Europe, and especially living abroad. I feel like you see a lot more use cases, and it's much more commonly accepted as a form of payment internationally for it. So,
well, that's a great point, Connor. Actually, the problem for most Americans is that we live in a very dollar-centric universe, and the dollar as a unit of account sort of reigns supreme in our minds and across the world. Foreigners are ultimately a lot more in tune with foreign currency moves, in particular how their currency moves against the dollar, and now how their currency moves against Bitcoin. And Bitcoin had already hit highs in many, many other currencies before it had hit a high in dollar terms. But Bitcoin has gained international recognition, obviously, as a store of wealth. And I think it is being used as a currency in some cases, Connor. I think that's a mistake in my mind. I think I view more or I have the thinking more along the lines of Michael Saylor. This was his quote. He said, "It's not a digital currency, it's digital property. The compelling use case is capital preservation for everyone in the world. Medium of exchange is only worth $1 trillion. Store of value is worth $100 trillion. And Bitcoin is going to be embraced as a store of value and as property. It doesn't have to be a currency. Nobody's trying to buy a cup of coffee with a fraction of their building on Fifth Avenue. But every rich person I know owns property in London or New York City somewhere. And none of them complain about not being able to spend their building as a medium of exchange." So what Saylor is saying is that the killer app for Bitcoin is capital preservation. The whole medium of exchange argument may be a distraction. And that's where things like the stable coins come in, where it's like, no, stable coins would be used as currency and as a medium of exchange. The dollar already is. It's perfect for that purposes. So I think, Connor, what most people are missing about Bitcoin is that it's property. And I think your story kind of highlights what happens to a lot of people is they FOMO in at the top of the cycle, and then it has the inevitable 50 to 60% drawdown and they get nuked. And then people kind of stop believing in the technology, if you will, until the price comes back. And then the cycle repeats, right? And the only people that seem to be winning from this cycle are the people that manage to hold on to their Bitcoin. So that's the key, right? Is to get your hands on some Bitcoin and to hold on to it and to stop obsessing over what it's trading at today or tomorrow, maybe even 2 or 3 years from now. Either embrace it philosophically as a valve for global, liquidity and the excesses of central banks, or, potentially miss out on what is the greatest asset class run of all time. And I think it's pretty easy just to hold your nose and buy some and hold it. That's step one. Step two is to, start going into it continuously. Step three is to get your hands on some Ethereum and stake it. And then step four is to wade into some of this more, speculative alt stuff for some real 50x type opportunities that you just don't really see that often in the stock market anymore.
So appreciate that, Z. I know we got to be a little tight on time today, and I want some time to dive into some dog-faced meme coin discussion. I think we'll save AI, game, and Web3 for another call. But is there anything you want to say about especially AI, opportunities in AI or gaming side?
So, yeah, look, the thing I would say, as opposed to just throwing out some names, Connor, which may or may not be a good idea.
Yeah.
I would tell you that, this AI thing is so small. Okay. You've got the largest, token out there, TAO, TAO, bit sensor, is like a $4.2 billion thing. There's Fetch AI, there's Singularity.net. Look, don't go buy these. Do some research, but these things are just little $1 billion things. My guess is this will become quickly a $100 billion thing. So we're at 26 billion market cap here for AI. I'm thinking, that goes to 100 billion pretty quick. So that's a 4x type opportunity. Obviously try to, stick with the larger projects, spread it out. That'd be my advice, Connor, with all these alts. Don't put all your eggs in one basket. Keep your position size and small. Spread it out over a few different projects. That way, you don't get caught in one. The gaming stuff, let's do it. Let's do that differently. Look, the trend in gaming is the blockchain solves a lot of problems for gaming. And I think it's the way forward for the monetization efforts that these companies want for their games. And I think all that's missing is like that first big, blockchain hit, Connor, that goes mainstream. And so, we're on the lookout for what, might be that big, first blockbuster game that kind of goes mainstream. But I just don't feel like I've seen it yet.
Right on.
The meme coins are interesting purely from a speculation perspective. Anyone who's drawn to price action should find these things interesting because of the speed at which they move. You've got really just a handful of what I would call mainstream coins, Doge and Shiba Inu and Pepe, and now you got this dog with a hat that's kind of come out of nowhere. Got some Solana meme coins too. Bonk has come out of nowhere. Okay, so your top names are Doge, Shiba, Pepe, dog with a hat, Floki, and Bonk. There's enough momentum for you right there. So it's pure speculation, Connor. It's pure price action, but it's furious and it's fast. And right now, it's one of those things that has the most GameStop-like price action. Does that make sense? Where GameStop was like, it wasn't driven by fundamentals. It was just a movement of small traders. This meme coin thing has that kind of feel to it. You still there? I don't know if we're still alive or not. I think I've lost Connor. I'm going to, tell you guys that the plan is to now break. Oh, there he is.
Sorry about that.
No worries, man. Connor, I was going to tell them basically the plan will be, I think from here on out, will be to kind of break this down into subcategories.
Mm-hmm.
And in the next, in the next one, we'll talk, more DeFi and go into, proof of stake a little more and talk about staking Ethereum. Today, I think, was more of a discussion about, hey, everyone should buy and own a little Bitcoin to get started, maybe buy and own a little Ethereum and stake it to get started, and then start to learn about these altcoins. Connor, what I was just saying was the most GameStop-like price action, just pure momentum. It's in these meme coins. So if you're just after, speculative price action, I think it's a great place to trade. There's a lot of liquidity, it's kind of part of this weird crypto universe that doesn't make sense to people who are outside of it. But I think the GameStop analogy is a good one. You just get speculative bubbles that move through these markets, and they can be very quick and dramatic in the stock market, but they can be even quicker and more dramatic in the currency market. So something like, Pepe doubles, triples in a couple of days. If you're into that kind of thing and you're into price action and you're into trading, then you can trade some of these speculative altcoins and these meme coins with no leverage and still get, the opportunity to maybe 2x, 3x, 4x your money in very short periods of time. Highly speculative. And you can also lose your ass. You can go in and buy these things like you talked about, Connor, and have them immediately pull back on you 50, 60%.
Right.
So, the Shiba Doge argument is a good one that we're probably going to have in the future. And we'll get into some of the utility of Shibarium and kind of what they built versus what's, occurring over at Doge, which is not a lot. But if you're going to speculate on a meme coin, these are your two biggest. You could go there. Other altcoins that he brought up just there, that we'll go into next more are, Link, Tron, we talked a little bit about, Solana, Uniswap, Kujira, Injective Protocol. Injective and Kujira look very interesting, built on Cosmos SDK. So we'll get to all these other blockchains in future calls. Connor, I know we're kind of coming up on an hour here, man. Why don't we just do a little Q&A and we'll wrap it up, man.
Sounds great. Thank you for your time today, Z. Let me pull up stream questions. All right. So, hold on. Lost in Character brings up Helium, HNT, wondering if you've ever heard of that or dabbled.
I have heard of it. I don't have a strong opinion about it. What I would tell you is that it's kind of in the sweet spot of market caps that I would look at. It's like just over $1 billion, 1.2 billion, I think. So you had this huge run up off of $2, around $8. Chart looks pretty constructive. Peak was around 50. Okay. So this chart looks like a lot of charts in crypto. You had the huge, massive run up into the peak in 2022, and then we just crashed hard. Okay.
Hold on, Z. Are you sharing your screen? Let me.
I'm not, but I can if you want me to.
No, it's fine. Go ahead.
Yeah. So just know that this chart looks like a lot of other charts in crypto. It looks like it's coming up nicely off the bottom. I would tell you that, anytime you get into these smaller blockchains, you got to really start to look at the team and, read the white papers, go and see what, is sort of being built. If memory serves me correctly, this is a wireless infrastructure play, which is really interesting.
That's right.
It is. It's super interesting. I know when people have these really grandiose visions, sometimes with these projects, I always like to see how grounded in reality they are in terms of can they actually execute what they're claiming they're going to do. So this is one of those that sounds incredible, and ultimately may be. I just don't know enough about it fundamentally to be like, hey, I'm long. I'm not long. I haven't been long.
Yeah.
But great example of some of the just incredible ideas that are being incubated in the space. Connor, I would tell anybody too, when they're looking at something like this, to really try to get to know the development team as well as possible. These projects are built off of code that is constantly being upgraded and changed. So if it's not a group of people actively working on a project, then it's something you probably want to avoid.
Absolutely. Answer a couple questions in the chat. We have questions pouring into the chat now. Folks, I started a Q&A in YouTube, and full disclosure, first time using it. So if that's in a separate area, I will find them, but drop your questions in the chat or a dedicated area. Either one, we'll get to them. So Hawk asked about halvings. He says, in past halvings, Bitcoin jumped between 10x to 30x within 5 to 18 months. Can you elaborate on why that would happen and why that could or could not happen this time?
So, I think the reason why it happens is pretty simple, right? Supply, demand. You're taking the supply that's available and you're halving it as, awareness of Bitcoin grows. So you're effectively, growing awareness of the network while the total supply is being periodically halved. So that supply demand, imbalance is what creates the run up subsequent to the halving. What we have in this case, though, that's been really unique is the prices run up before the halving, which I think could be really bullish. And I think the only difference between this halving and previous halvings is probably the size at which, the market is already at 1 point, 1.4 trillion, almost $1.5 trillion. It's going to be tough for this to 10x overnight. So I would say I expect a similar movement up in price. However, maybe not the same size and multiple. I know Saylor's pretty bullish. He thinks Bitcoin could easily 10x from here. I tend to be more conservative with my mindset of, okay, maybe this thing becomes half the size of gold. Either way, that's still, a 4x or 5x, but that'll take some time. So I think there's really nothing different other than maybe just the market has gotten so big it can't grow as much as it has in the past.
Much appreciated. Before I get to the next question, reminder to everybody watching, if you are not already a paid subscriber on our website, we do daily analysis, a lot of it, every day in written form, plus weekly live calls together, plus premium content, plus live events, and then some, all behind the paywall at carnivoretrading.com/pro or carnivoretrading.com by itself. Everybody gets a free week trial, but if you are new here, then use promo code LIVE for 50% off your first month once your 2-week free trial ends. Thanks again for being here, y'all.
Connor, I'm seeing a lot of questions flow in on how you stake ETH. The easiest way to stake ETH is through Lido. So just go to Lido and use that app to stake your ETH instead of trying to figure it out yourself.
Don't stake your ETH by yourself. Go to Lido. All right.
And hey guys, remember, a lot of times I'm giving you the airport answer, right? Which is, how you get to the bathroom the quickest. It doesn't necessarily make it the best answer, right? So, if you've got enough ETH and you can figure out the staking process yourself, you get more rewards. If you're just buying a little ETH and you want to stake it and don't want to deal with the technical issues of it, Lido makes way more sense. It's kind of like the Coinbase thing. So Lido would be the easiest way for most people to get, the ETH staked. A lot of platforms too, you buy it on. I think maybe you might be able to stake it on Robinhood. I don't know. Maybe on Robinhood. I should know that, but I don't.
How sure I was about to ask. So your answers today, you're catering them towards the most applicable answer for the most people in your mind?
That's right. Right, and trying to onboard people. So to remove the barriers of entry and the technological friction and the fear associated with that by most people. I find that the app-based, Coinbase or Hood, if you can use a phone app for any other thing, you can open those accounts pretty quickly. It's just really a user-friendly interface.
Right on. From the questions tab, Mingrind. Today, Coin was a buy, but last week or so, IBIT was touted. Does Coin offer something that IBIT does not?
So Coin is Coinbase, right? And that's a business in itself. They're an exchange, so they make money buying and selling crypto, selling alts. They have their own chain. They are acting as institutional custodians for the Bitcoin ETFs. So Coin is a diversified blockchain company business. Bitcoin is Bitcoin. Huge difference. Coin has been on a great run. The only fear I would have as Coin as a business is fee compression. So they gouge people pretty good for fees. That's the drawback to the ease of use, right? But they're making a lot of money right now, and they are one of the few compliant, sort of ubiquitous on-ramps for most people and off-ramps too for people in crypto. So I don't think Coin's going away anywhere. Just know that one is a business and a company, and the Bitcoin Trust is tracking Bitcoin, and those things are two totally different things. Bitcoin itself is a commodity. That's what you see trading at 72, 73,000. Coin is a brokerage that is in the business of buying and selling crypto and other crypto-related businesses, like being a custodian and a client asset gatherer.
Right on. I think that's about it for the questions. I want to pose a topic to the listeners. What topic you want to hear most bad next time? Do you want us to dive in first on AI and blockchain, meme coin debate, altcoin speculation, or actual how-tos of setting up Coinbase and some of the tactical stuff of how to invest?
Yeah, Connor, one of the questions I get a lot is how do you even get access to some of these smaller coins? Setting up, a wallet like for DeFi and Web3 stuff. Look, we can break this down if people are interested in this stuff, and we'll get more granular in terms of some of our favorite alts if that's what they want to talk about. Yeah, man, look, this is great fun, and appreciate everybody being here.
Much appreciated, guys. Drop your question in the chat. I'm going to let the stream go for a bit longer, and I'll continue answering things in the chat, and I'll be picking up questions for our next stream here. Once again, to get the premium content and daily analysis and more specific cryptocurrency discussion, join carnivoretrading.com/pro. Sign up for a 2-week free trial and use promo code LIVE for 50% off your first month. Thanks again for being here, y'all.
Thanks, everybody.
Thank you, Traders Eve.